Things are finally picking up and getting exciting in markets as it looks like we're just on the verge of a generational wealth creating breakout. XRP just rallied back up to 60 cents. Bitcoin is just above 60,000 and the S&P 500 or TradFi markets are trading just 1% off their all-time highs. Risk on asset classes continue to rally into the first interest rate cut from the Fed, which is scheduled to happen on Wednesday, September 18th. In other words, a weakening labor market, a potential second wave of inflation, a bunch of negative news and economic indicators haven't been enough to spook markets into selling off. Instead, all we've seen is accumulation on the downside and a list of strong indicators that tell us an end of the year rally is still on the table. So buckle in, ladies and gentlemen, because not only will we be covering a recent major piece of news surrounding the SEC and their misconduct that has cost small investors almost $15 billion, but we'll also be covering a lot of different indicators and analyzing some key metrics that will give you insights into what comes next for crypto markets and your portfolios. So if you're feeling blessed and bullish, comment 777. And if you're going to be the richest person in your family tree, smash the subscribe button. Before we dive in, a quick reminder that the opinions in this video are for informational and educational purposes only and do not constitute financial, legal, or investment advice. All investments, including cryptos, carry risks and potential losses. Always do your own research and consult with a licensed financial advisor. We are not licensed financial advisors, and relying on our content for financial decisions is at your own risk. By watching this video, you agree we are not responsible for any losses or damages, and we do not guarantee any specific results or outcomes. Some of the links below may be affiliate links, and we may earn a commission, which actually helps support this channel and helps us to create value-based videos like this. We also hold some positions in the cryptocurrencies that we talk about, but that's only because we do what we believe in. However, this should not be interpreted as a recommendation for you to do the same. With that said, let's get into the video. Okay, now before we begin this video, I just want to make a note of the fact that I will be covering a lot of TradFi market stuff and Bitcoin stuff in particular. And the reason I cover Bitcoin is because I have to remind people over and over and over again that XRP and Bitcoin are highly correlated. If one is going down, the other is likely going to go down, especially if it's a nasty bout of volatility. In other words, if some major event happens or there's a major liquidation in the Bitcoin market, it will be extremely likely to affect XRP and other altcoin markets, considering XRP is still a fraction of a fraction the size of the Bitcoin market, sitting at about like $30 billion on average. Bitcoin is almost 800 to $1 trillion in terms of its market cap. So it is a far larger market, and the same factors or variables that drive the Bitcoin market often impact XRP as well. And I can prove it to you on this chart. So I have right here the price action of XRP. And although they're not always 100% correlated, obviously, there are a lot of similarities in terms of the way that they rhyme in terms of the price. So let's go ahead and look at that. Okay, so right here, back on January 1st of 2023, right behind me, I don't know if you can see that, there we are. This was the start of the bull market rally and arguably the bottom of the bear market. Since that point in time, Bitcoin has outperformed XRP, being up about 260%, you can see on the right. And then on the right down below, you see the price action of XRP that is denoted by the actual candlesticks, both red and green. The green line is Bitcoin. XRP in that same time frame is up 71%. So it has recently underperformed Bitcoin. However, that has changed. What I'm really after is just focusing on the way that these markets move in union. In other words, when one is rising right over here, the other is rising. Okay, I'll try to get out of the way right here. And then what happens is they both, again, rise together and then dump together. You can see Bitcoin starts dumping right here. XRP is dumping. And then sometimes you'll get a negative correlation where Bitcoin will continue dumping a bit while XRP rises. But generally speaking, they both rise together, they both dump together. rise right here, dump right here. And they've both failed to rally to new all-time highs since their local highs right here since March 12th of 2024. They've both kind of just ranged and traded sideways and actually down a bit. The only major difference right now is the fact, and I'll go ahead and pull this up a little bit tighter and closer. We'll go from the local lows right here, is the fact that XRP is now outperforming Bitcoin. But yet again, you can see this positive correlation. One goes up, the other goes up, one goes down, the other goes down, so on and so forth. So for anyone in the comments that's going to say only talk about XRP, the reality is Bitcoin is the driving force in the market. And until that changes, we're going to continue talking about it because we have to be grounded in the facts and reality. XRP might make some major moves, and when it does, that's awesome, and they will be, it'll be separate and on its own. But the price of XRP, I've noticed, even when it has a massive breakout, never really affects the price of Bitcoin. However, it does work the other way around. So I want to be clear about that because we're going to talk about Bitcoin, and when Bitcoin experiences a healthy market or a trajectory, chances are it provides a lot of breathing room and air for XRP to do the exact same thing. Now for a bit of the good news, here's the reality. XRP has failed to break out to new all-time highs since its recent, or not recent, 6.5-year previous all-time high back in January of 2018. However, it has painted a very strong range of support and resistance in the form of an ascending, I wouldn't say an ascending, it's just a triangle or a pennant. The last time we experienced that was back here in 2013 to 2017 before some insane moves to the upside and breakouts, and in similar fashion we're nearing the very end of this range. So at some point in time something's going to have to happen. The longer the range, the stronger the breakout, and if Bitcoin starts to break out to new all-time highs unlike XRP has over the last 6 years, Bitcoin has put in new all-time highs, XRP has not, it's very likely it's going to provide room for XRP to not only break out to all-time highs but potentially to make some insane all-time highs, at least to the $5 to maybe even the $7 level, at least this bull market cycle. Now, I know the XRP community hears a lot of things, they see and read a lot of things, they think market cap doesn't matter, but I'll tell you right now, some of these price targets of $1,000 or $500 for XRP are completely outside of the realm of reality. Market cap very much does matter for a trading asset on exchanges, okay, where people are holding it. Because at the end of the day, if this thing went to, let's say, a $500 trillion market cap, which again is not realistic, here's the reality. Everyone would be extremely rich in XRP. And that's just not likely with an asset that's currently trading at about 60 cents. But what is likely is for it to at least get to its previous all-time high and potentially make a new all-time high that's far more realistic. Now, I'm going to give you guys some of the really good news and then some interesting news surrounding the SEC. Now, the SEC is really getting their ass handed to them yet again, as this is a statement from Paul Grewal, which is the chief legal officer over at Coinbase, and he's also talking about S. Alderodi or Stewart, which is the chief legal officer over at Ripple, and so both of them are on the same team. Both of them are not fans of the SEC, considering they've just been playing a lot of ping pong with the way that they've been, creating cases or lawsuits against the crypto space. And so recently the SEC regrets any confusion it may have invited by falsely and repeatedly stating that tokens themselves are securities. This is a remarkable representation in footnote 6 of the SEC Gov's amendment complaint against Binance. I hope Stuart Alderodi is getting some good sleep tonight. His head's about to explode when he wakes up and sees this. And basically what this is stating is that the SEC themselves is saying, you know what, we never actually meant that these were tokens or securities. What we were really just saying is the fact that it's just a shorthand reference. The security in this case is simply not the crypto asset. Yet that's exactly what they've been stating over and over and over again. And matter of fact, back in November of 2023, and the case currently isn't settled, they sued Kraken, stating that they were selling crypto asset securities. So now they are actually backtracking on that and I couldn't imagine being in their shoes and, spending hundreds of millions of dollars on these legal battles only to have the SEC completely negate their entire point to begin with. Now, that said, this gentleman right here, John Deaton, which is a senator right now, said the crypto overreach has cost retail investors $15 billion. That is actually insane. John Deaton asserts that the SEC's aggressive intervention has resulted in more than $15 billion in losses for small investors. In a surprising move, the SEC appears to be shifting away from its long-held position that cryptocurrencies are inherently securities. Now, we don't understand exactly why that's happening right now, but my personal theory is the fact that at the end of this term, this presidential term, and into the next election, at some point here in the near future, Gary Gensler is likely going to either resign or leave his post and station. And since they're already on the defensive with a lot of these cases and just losing ground over and over and over again, I'm assuming that they're just trying to, let the ball off easy and actually keep some integrity over at that institution, which would likely give it authority still, because everyone thinks the SEC is currently a joke under Gary Gensler and Elizabeth Warren. The SEC's misconduct and gross overreach caused small investors over $15 billion. On behalf of those 75K small investors I represented, we do not accept the SEC's apology. By September 10th, the regulatory body had imposed nearly $4.7 billion in penalties on cryptocurrency firms and executives, marking an extraordinary 3,000% increase from 2023. That is insane, guys. So the SEC is just going, again, full scorched earth. They don't give a crap what it does, who it is, whether or not there were any, promises of potential future profits to be made, which is what indicates an actual security. They're just suing everybody, and that would even include OpenSea, which is just an NFT platform for artists and creators. This is ridiculous, and at the end of the day, it's really refreshing to see people starting to stand up against them. And so over here at the channel, we believe that the year 2025 is going to be a new era for crypto under a new administration, even if it is Kamala Harris. As much as I personally wouldn't like to see that, and I try to remain unbiased, I do believe Donald Trump is a far better choice for president when it comes to markets, when it comes to the economy, when it comes to just the strength of the nation and how silly the last 4 years have been under a very incompetent administration. That said, the Circle CEO claims the U.S. is on the path to becoming the decisive leader in crypto. And they announced that they're recently relocating their headquarters to New York because probably that's where all the talent is. However, this is what he said. The U.S. is at a turning point in crypto and about to become the decisive leader in nurturing the technology, Jeremy Allaire, CEO of stablecoin issuer Circle, wrote in an X post on Friday. And in that, he says that financial innovation is a key driver of New York's economy and our country's future. And it is critical that the innovative companies of the future are born and nurtured here in the USA. So it is very much refreshing to see a massive player in the crypto space, Circle, which is behind USDC, the stable coin, saying we're going to set up shop in the US and we are going to fight through this and continue to do business as usual until, we get a new incoming administration and things look better for crypto. But we're not leaving. So that is very big news, as they believe strongly that the infrastructure they are collecting or collectively building, this new internet financial system, will be the foundation for the next 100 years of global economic activity and coordination. And on that note, into the elections, things typically look really bullish. As you can see here, back between the Hillary Clinton, Donald Trump era of 2016 into the election and post-halvening, the markets really rallied into the end of the year and put in new all-time highs. This line indicates the actual November election. Same thing happened here in 2020, We had Donald Trump v. Biden, and the markets really rallied into the end of the year. And in similar fashion, here is the election time. We are not there yet. If anything, we've experienced a very long, drawn-out summer lull. Started a little early in March, and it is very much potential that we start breaking out before November. But whatever happens, at the end of the day, things are starting to look far more bullish for markets, especially if someone like Donald Trump is in office, because here's what he recently shared.
The future, we will embrace them, including making America the world capital for crypto and Bitcoin.
So yes, things are starting to look far more bullish for the entire crypto market. And here shortly, we are going to be covering a lot of those technical or on-chain analytics that point to a very bullish end of the year. But before we do, head on over to bullrunners.com and subscribe to take advantage of our all market solution. You can do this by putting your XRP to work, which not only reduces your volatility in the case of some potential downside or maybe even some sort of an unforeseen black swan event, but it also allows you to compound on your XRP bag or add to it before the cycle really gets rolling, because we believe the end of the year is going to be explosive and dynamic, and it would be nice if you had a bit of extra XRP on top. You can do that. You can earn crypto in less than 10 minutes with the #1 play to earn XRP game. You do it in 3 very simple steps. You get an XRP wallet, you send XRP to the wallet, right? Then you get your rare game pieces, and then finally you play the game to earn crypto. Now what's so beautiful about this crypto is directly convertible for XRP. So it's up to you what you do with the XRP from there. You could sell it, you could hold it, right? You could hold on to the crypto itself, whatever you want to do, but we explain exactly how to do it on the other side once you subscribe. So go to bullrunners.com, link in the description below. Look forward to seeing you on their side. Let's get back to the video. Okay, so now we're going to get into some really bullish indicators. As I mentioned in the beginning of this video, XRP is very dependent or reliant on a healthy market environment. And if Bitcoin is in a good space, so to speak, or looking bullish and breaking to new all-time highs, then that provides a lot of room for growth for XRP, which is why I'm going to be covering 1 or 2 macro things. The majority of this is going to be a few Bitcoin things. Now, again, you're sitting here like, I just want XRP stuff. Well, at the end of the day, XRP isn't really doing too much right now unless Bitcoin is also in a healthy space. So I'm doing the best I can. It's kind of like this. If you and I both get into a tube called an airplane and go 30,000 feet above the sky, that's what where we're trying to be to get a view of the landscape. But not looking at Bitcoin is kind of like closing your window shade and then guessing where you're at without obviously looking at the flight map in front of you. At the end of the day, we need that window open. We need to be able to see out and have that perspective in order to really understand what's going to happen with XRP. So what we're going to do is we're going to watch this quick little segment of this video and understand what's going to happen with the Fed and how banks are loaning out now, which is really important for the health of the economy. Then we're going to look at some macro, or I would say on-chain analytics for Bitcoin, and then we're going to look at a little bit of technical analysis. End the video. How's that sound? Okay, let's get into it.
Earlier in the month, we also received the Q3 data for the Fed Senior Loan Officer Survey, which showed another sharp increase in banks' willingness to make commercial and industrial loans. And this is important, right? This is a major business cycle positive because more credit availability is what? Well, it's more cowbell. And not only are banks easing up credit standards for C&I loans, but we're actually also seeing a sharp uptick in demand. And credit is really the lifeblood of economic growth, because when businesses start borrowing more, it's usually a clear sign that they're gearing up for expansion, whether we're talking about new projects, hiring more staff, ramping up production. So this is bullish in my opinion.
So to sum up what he said, the banks are now starting to ease up on their lending standards. Now, it's important to note that just because a bank is willing to loan more money out, which, is credit availability, so to speak, it doesn't necessarily mean that the demand is there. If interest rates are still too high, then businesses are far less likely to want to take on that debt plus interest in order to expand their operations, or in this case, maybe keep a few extra employees, whatever the case may be. But when you see both of those factors, right, they're starting to lower their standards in terms of loaning out capital. They're not holding on to it really tightly because they're worried about defaulting on, their credit, so to speak. On the flip side, then you get businesses and consumers more likely or willing to take on debt and capital to expand their businesses or grow their projects or to buy a home, whatever the case may be. That is a very positive indicator for markets, which is very bullish. So now you get this overlying bullish environment from a macroeconomic standpoint because people are really getting more positive about the Fed's first rate cut. Then you take into consideration now Bitcoin and what's happening with Bitcoin. Well, right now, MicroStrategy, one of the biggest Bitcoin stocks in the world, just bought another $1.11 billion in Bitcoin. Michael Saylor is insane. This guy consistently just puts up and finds ways to get more debt in order to buy more Bitcoin at these prices because he believes that Bitcoin is going to be worth far more in the future than it is right now. Now, here we have MicroStrategy over at Bitcoin Treasuries. And as you can see here, it was recently updated as of September 13th. They added another $1.1 billion of Bitcoin. The previous reading was $8.3 billion that they've spent to buy Bitcoin. Now they've spent $9.45 billion. The average market price they bought at, $58,000. So if you're buying this much Bitcoin and you're holding on to it for this long, since 2020, chances are it's because you believe Bitcoin is going to be worth at least $150,000. I know Michael Saylor thinks it's going to be worth well over $1 million. And so, the majority of big players like BlackRock, like MicroStrategy, like the Fidelities and VanEck of the world, are buying and holding Bitcoin in the droves. And that's proven in the exchange reserves. Right here, I have a chart of the exchange reserves, and I'll go ahead and move myself right here. And as you can see here, since the local high in March of 2024, Bitcoin has been removed from exchanges in mass. And even on this last little rally, even more was removed. We're sitting on an exchange reserve of the lowest that we've ever seen of 2.5 million Bitcoin. And prior to that, in March, we were sitting at about 2.9. So 400,000 plus Bitcoin has been removed from exchanges. This is the fastest rate I've ever seen Bitcoin removed from exchanges consistently over a sustained period of time, aside from when FTX collapsed, right? Where that whole scare around not your keys, not your crypto happened. Everyone said, I don't feel safe on any exchanges. And so everyone withdrew. That was a very different type of an event, a black swan event. Here, we're seeing consistent small amounts and sometimes even large amounts being removed, which is a strong indicator that there's going to be less Bitcoin. And so if demand remains the same or even gets higher into the end of the year, that is going to create a supply crunch and cause the price of Bitcoin to skyrocket, which guess what? That's also going to create for a positive bullish environment for XRP. Then when you look at the stablecoin supply since 2023, and we're talking these lows, and I'll just even pull this back even further, we've seen stablecoin supplies consistently rise and rise and rise. Now, why is this positive? This means that there is more dry powder ready to accumulate and buy any one of these dips, or in this case, accumulate into a new all-time high. So the fact that there's more stablecoins sitting on the sidelines is a very positive, sign or an indicator that we have far more upside than downside. If, however, stablecoins started dumping like this and continued dumping from March on down, that would not be a good indicator. But the fact that it's now rising and at a new multi-year high, very positive sign for markets. Now we're going to rapid fire between two other major bullish indicators. The first is the fact that this guy, Axel Kibar, is a phenomenal technical analyst. And basically he's saying the willingness not to back off from that all-time high horizontal resistance and 7 months in a row tight consolidation with the short monthly candles is super bullish in his opinion. As you can see here, we have that 70K range on a monthly time frame. And over the last 6-7 months, Bitcoin has remained in a very tight range, failing to really break down. In other words, what I will be looking for is a monthly, multi-month long uptrend that can develop from here, similar breakout candles on a monthly scale. In other words, he's looking for something like this right here, where you get one breakout on a monthly time frame, and then you get some major moves to the upside. And finally, Bitcoin miner capitulation has reached levels comparable to when Bitcoin was at $16,000, which did mark the bottom. As you can see here, miners are consistently capitulation. Network true hash rate is down by a percentage of almost 8%. Now, what this means, is pretty straightforward. People that keep the network up and running using a lot of computer power are capitulating. They're starting to sell because they have to keep their operations running and they can't afford to hold Bitcoin any longer. So this is a very positive sign for the price action of Bitcoin and markets in general. So now we'll look at XRP in particular. Okay, we do need a break above this, range right here, which is this green line that's a descending wedge or a triangle, if you will. And so a breakout above here would be extremely bullish. And if it does happen sometime at the end of September or into October, even more so, because around that time, you can see that we have a confluence where the price would align with this horizontal support and resistance. Then if we get into this 64-cent range, I would thoroughly expect us to at least get into the 74 to 75 cent range. If we break above this range here at 74 to 75 cents, so we have two major targets to break above, the 64-cent range, the 74-cent range. I do believe this is going to be slightly harder to break above. We may bounce around in this triangle for a bit longer, sometime into maybe October, November. But if markets like Bitcoin and the TradFi markets look generally strong, that's going to provide for a very positive environment for XRP to break into this red zone right here. And in the red zone, if we break above 75 cents, I do believe it's very much likely and possible and easier, considering we don't have a confluence of resistances right here. So right up here, we break above that, it's smooth sailing up to at least the $1.50 to $2 range. And I would argue, because this is such a long period of time, 6.5 years of consolidation, we're likely going to get into that all-time high territory of at least $3 to $3.31. Now, what I would like to see on these breakouts is a consistent growth in volume. Right now, we've had a consistently declining volume. Volume is getting weaker and weaker and weaker and weaker. Now, that's a fine sign in a situation like this, because that means there is a contraction of volume. But whenever you get a very long, strong contraction of volume on breakouts, you want to see an increase in volume. So I would like to see volume increase well above average and potentially up to this third standard of deviation range. In the case of Bitstamp, this would be about $100+ million of volume per day. If we can get into that range, it's highly likely that that is a confirmation that institutions are really playing with this thing in terms of their dollars. Someone could say, well, institutions already are. They have partnerships, but not in the case of XRP and its volume. That's just the reality. The volume is telling me a story, and the volume is telling me there is a consistent contraction. Institutions might be using Ripple technology to move money, and they might be collecting fees on the back end, but that doesn't necessarily mean that volume is coinciding or adding to the XRP token itself. So it's really important to make that distinction. If that was the case, we would see volume far bigger, but right now it's very much below average consistently. This blue line is average, and right now we're kind of playing around right below the line with a few spikes in volume for volatility. Generally speaking, volume is contracting. Not a bad sign. Relatively, XRP, since its local low right here at 38 cents in July, is looking stronger than Bitcoin. So that is a very good and positive sign. If Bitcoin breaks out, it's highly likely not only XRP breaks above the 64-cent range, it's probably going to fly right through that 75-cent range, likely going to at least $2. So if you enjoyed the video and learned something new, go ahead and subscribe to the channel. It really helps us out. Like the video. And one last time, if you are an XRP holder or plan to hold XRP through the end of the year, the best thing you can do is go to bullrunners.com, link in the description below, to discover how to earn more crypto in less than 10 minutes with the #1 play to earn XRP game. Doesn't matter if it's a bear market or a bull market, this is an all market solution. Helps you to reduce your volatility, add or stack onto your XRP bag in the case of a major breakout. We really look forward to seeing you on the other side, and I'll talk to you in the next video, my friend. Goodbye.